Hey there traders, this is Steve Miley, the market chartist for FX Explained and our regular weekly MacroWatch roundup for the week commencing the 29th of March 2021. Yields correct lower, but US dollar strengthens. So first of all, we're going to take a look at the macroeconomic and geopolitical developments over the past week as we move into late March and the end of Q1. When various speaking engagements over the past week, Fed Chairman Jerome Powell has reiterated the very dovish stance from the Federal Reserve in here, with markets starting to anticipate reflationary pressures. They're still sticking to their tone of extreme dovishness, keeping interest rates at super low levels in here as we go through the balance of 2021 and into 2022 and potentially beyond. So that dovish stance really being reinforced by the Fed and by Powell over the past week. We've also had the German Ifo Business Climate Index come out for March, posted at an impressive 96.6 from 92.7 in February, beating analyst expectations. And all of this has combined for a more positive outlook for global equity markets and seeing global yields back up to lower yields from their high yield extremes. Moving on to look at the COVID situation, where the European vaccination program is still lagging the UK and the US vaccine rollouts. The US doing a good job, stellar job still being done by the UK, but the European vaccination program is starting to kick in. And we've also seen the disagreement between the UK and EU around the import and export of COVID-19 vaccines in here. They have seemed to reach some kind of agreement over the past week. So a positive, hopefully, for both the UK and for Europe on that. Cases in Europe, however, are still rising, which is of a considerable concern, whilst cases in the UK continue to plunge lower, although they are bottoming out, the cases bottoming out at the moment, the number of new cases. However, we are seeing still a significant fall in the UK in the number of hospitalisations and deaths as the vaccine programme rolls out, although in Europe that is not the case. We're seeing high numbers of cases, high numbers still of hospitalisations and deaths also in Europe. And so we've seen France and Italy go into more severe lockdown measures again in here over the past couple of weeks, and other European nations poised to reintroduce more rigorous measures. We've seen Germany also extend their lockdown, the more recent lockdown phase that they're in at the moment. Let's take a look at the global financial market developments on the back of that for last week, ending the 26th of March. Well, US yields in here have slightly corrected back towards lower yield territory, having had this higher yield surge in here through 2021. Remember that higher yield surge being driven by concerns about reflation turning into inflation as we go through into 2021. But we have had, with those more dovish comments still from the central bank, from Jerome Powell, from the US, we have seen a dip lower in yields in here in the US and globally over the past week. The DAX has got back up very close to posting a new record high, surging rebound at the end of last week, having had a corrective phase through from the middle of March in here and sitting right on its record high, and similar with the S&P 500 in here with the record high in the crosshairs. On the Nasdaq, more indecisive. We did get a rebound at the very end of last week, but still remains in a more of a consolidation phase, having had that significant setback in here February through the first part of March. The US dollar has been a beneficiary in here over the past week, pushing out above the peak previously from March for the US dollar index here. And the US dollar strength, in spite of the fact that we are seeing a move back to lower yields in the US, because really we're seeing yield differentials continue to widen. Although we're seeing US yields move back to lower yields, the lower yield moves have been more significant in here in other global bond markets, particularly in Europe. So the yield differentials continue to be pushing out to a widening of yields versus the US, which keeps the US dollar strong. So we've seen that reflected in the euro breaking down last week through the previous March low, taking out supports that go back to 2020 November into Q4 of last year, November last year, and aiming still lower. And the pound has continued its correction, breaking down through support in here that was established through the first half of March last week. We did get a rebound at the back end of last week, but the pound looks like it wants to continue the correction of this strong rally that we saw from Q3, Q4 last year and through the first part of Q1 this year. Australian dollar broke below the March low in here late last week, or sorry, through the middle of last week, plunged lower last week, and despite a small rebound on Friday, still the risk for the Australian dollar are lower. And this is again reflecting US dollar strength. We're in a risk-on environment, but the Australian dollar underperforming. And in the crude, on the side of crude in here, very choppy in here over the past week, having had that significant sell-off in here through mid-March, but in reaction to a really strong rally since November. So underlying strength still for oil, but in the short term in here, choppy and sideways. And similar for copper, sideways in here since the beginning of March, since that sell-off late February, early March. Underlying tone still very bullish from the whole rally from last March. So a 1 year rally in here now for copper, but the market more sideways in here over the last 2 to 3 weeks. And gold did rebound from early March, sideways in here for the last week, not really able to not being able to build on the rebound that we saw from the beginning of March, and the threat is for those negative pressures that we're seeing from the beginning of 2021 to come back through. Gold continuing to look vulnerable, particularly with the US dollar strong. Okay, so let's take a look at the week ahead, the week commencing the 29th of March. So remember, this weekend just gone, Europe and the UK switched to their daylight saving time. We're on British summertime in the UK now. So the difference between New York and the UK is back to the 5 hours, having been at 4 hours differential for the past 2 weeks, back to the normal 5 hours now between New York and the UK. It's Good Friday as well, this Friday coming on the 2nd of April, and with most global markets closed for the Easter holiday. And we have them, we're going to continue to monitor near COVID-19 cases, hospitalisations and deaths, particularly with a spotlight on Europe, and also looking for any potential new lockdown measures in Europe as the third wave continues to be rife throughout the continent. On the central bank side, we have no significant central bank activity this week. There are some Fed speakers, but no meetings, no minutes being released. And Friday sees the release of the US employment report. Now, this is of particular note, given that US and global markets are closed on Friday. The data is still being released on Friday, but markets closed in the US and global markets closed for Good Friday. So let's take a look at the macroeconomic events coming up this week. Nothing of real note for Monday. We get the Japanese employment report Tuesday, Chinese PMI, UK GDP, and the German employment report all on Wednesday, alongside the EU Consumer Price Index, CPI, and then the US ADP employment change. On the first day of the quarter, the first day of April, on Thursday, we get global market manufacturing PMI, and also the US Institute of Supply Management, the ISM manufacturing PMI, and sandwiched between those we get the German retail sales. And then on Friday, as I say, it's the global holiday, the Good Friday Easter holiday. Pretty much most all, in fact, significant global markets are closed in here, but we do get the release of the US employment data. That's going to be interesting to see how the market deals with that come Monday, when some markets reopen. The Monday after is Easter Monday. For a lot of Europe is closed, but the US open. I'm going to wish you all a great trading week. Please do stay safe out there. Don't forget to hit that like button on YouTube, and also to follow us on our YouTube channel. And we'll be back with you very soon for another Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch, and all the great content on fxexplained.co.uk.